Steve here, with the Tuesday Morning Ledger. Let's look at the tape. The U.S. 10-year bond is holding firm at 4.31%. The S&P 500 is testing critical support at 6582.69. Gold is showing a strong recovery at $4,676. Bitcoin is consolidating near 67,367. And Brent crude, it is holding the war premium at $106.40. These numbers are the baseline for a market that is currently paralyzed. We are seeing a complete stall in institutional bidding as the desks wait for a clear signal from the Situation Room. The chart on your screen isn't just data, it's the final snapshot before a potential structural shift in global trade. Checking the economic calendar, we have no red folder news scheduled for the remainder of this Tuesday session. All the high-impact domestic data, including the morning's employment numbers, have already been digested by the market. In a standard trading week, this lack of data would lead to a low-volume, sideways afternoon. But we are not in a standard week. The red folder has moved from the Labor Department to the State Department. The only data point that carries weight now is the 8 p.m. countdown. The absence of economic news creates a vacuum, and in this market, that vacuum is being filled by geopolitical anxiety. Now let's talk trend. Despite the S&P holding above the 6,500 handle, the technical indicators are flashing a bearish shift. We are trading well below the 20-day and 50-day moving averages, and we are seeing a death cross formation on the 4-hour charts for several lead tech stocks. The higher-for-longer reality of that 4.31% yield is acting as a gravity well for growth. While the long-term secular bull case for hard assets remains intact, the broader equities market is showing signs of structural exhaustion. We are officially in a sell-the-rib environment. Unless we see a miracle close above 66.40 today, the path of least resistance remains to the downside. The primary driver of this bearish lean is the ultimatum regarding the Strait of Hormuz. Tehran has officially rejected the ceasefire proposal, and the power plant threat is the only headline that matters. If that waterway stays closed past the 8 p.m. deadline, 20 million barrels of oil a day remain offline. This isn't a temporary supply hiccup. It's a fundamental re-rating of global energy risk. We are looking at a physical supply shock that the Fed cannot print its way out of. Your plan for the afternoon is simple. Capital preservation is the only priority. Do not chase the midday volatility. Stay heavy in domestic energy, hold your physical gold, and watch your stops with extreme discipline. We are in a binary market. Everything hinges on that 8 p.m. clock. Watch the ledger. I'll see you on the other side. This is Steve.